What is going on, everybody? And in this video, we're providing you a state of the market and stock picks for August 31st, 2022. So if that sounds like something you're interested in, consider subscribing, as we do provide daily and weekly updates to get you prepared for this wonderful, glorious market in which we are in. Now, state of the market. State of the market is we do have the AEA inflation numbers coming out tomorrow. I don't know how much weight that will have. The one thing that I do like is we started to sell again, and we were not waiting for anything in particular. There will be a lot of Fed members talking for the remainder of the week. Maybe those inflation numbers will cause the market to pull back more so. Again, I talked in the beginning of the week that I believed we would actually revisit roughly that where the 75 point basis move is. So roughly around that 3,830 roughly. It's kind of where I'm looking at. And so the move I was expecting yesterday actually happened more so to today. And then if you didn't notice, I actually have this chart is actually pretty clean compared to what it normally is. I am trying a new technique here. It is using the Fibonacci retracement. I have used this previously, but for me, again, I'm trying to pinpoint more of a reversal because I do believe this leg could potentially be the leg in which reverses everything. Again, that's not guaranteed, but I believe the market is showing some kind of weird strength that wasn't normally there before. I think the fear factor, people are just kind of becoming numb to what's going on. And so I really wanted to watch this leg down. And so hence why I really started picking up this new technique. It does involve some other things, which I'm not really going to teach until I try it out more, but I do have it color coded for a reason. It's just not randomly colored that way. But nonetheless, that is what I'm doing with this. And that's why this looks a little bit different. But nonetheless, what do we got? We got non-farms on Friday is what I think the market is really waiting for. If that is good, we could potentially see a push up. One thing to understand is today more news reports came out about Snap laying off, I think it's like 20% of its workforce. And then Meta was laying off more people as well. So be mindful. There's all these things I've been talking about. They are slowly playing out. I do expect another 75 point basis move. The Fed, even if inflation came down to 7.5, we're still 3.5 points away from a 4% inflation rate. And so I could see us finishing out with 75 point basis moves for the remainder of the year. And then hopes in the beginning of the year to actually see the numbers that they potentially want, and then they could potentially dial back until those inflation numbers come down to closer around that 4. I think you're going to continue to see rates being piled on until it is corrected. And this is why, if you noticed in the beginning when we were talking about rate increases, there was a lot of weight on the data that came out. Now the market is starting to see that it really doesn't matter what the data is that's coming out, because inflation is still high. So that's what you have to consider, is it doesn't matter because inflation is still being reported high. This is why there's two different kinds of inflation. There's headline inflation and there's core inflation, and the Fed doesn't like to, they like to separate them because, food and energy are always very volatile, but when food and energy are what's causing or wreaking the havoc, that's one thing you need to understand. So, and then there's talking about energy shortages as well coming into this winter. Which could lead to a lot of other really bad things. And Germany inflation rate went up again today. I believe it was at 7.8 and it came out at 7.9. They have been doing maintenance on their oil lines as well. So that is kind of what they had, that bump in inflation. Again, these oil issues are going to continue to arise with everybody using or understanding that we've been tapping into reserves, and we try to fill those reserves, but those reserves are being filled with less quality oil. And so that's something you need to understand too. So still looking, I think we're still looking at demand destruction, and what that entails moving forward, especially now more people are potentially getting laid off. Again, this is something I keep repeating myself. I know you're probably tired of hearing it, but this thesis is playing out. It's not like it hasn't been. You've kind of rallied. Maybe it was primarily because of the earnings mode. Something I said, this is normally kind of what happens during an earnings mode. Then you get a normal sell-off, and then the cycle's around, and you get another one of these pushes up. But we're going to have to see how this plays out, because currently right now, all your big techs have did stock splits, and Tesla really hasn't moved. If Tesla is old, although it's not in cycle, we're really going to test Tesla when it gets into the next earnings cycle, if it's a Tesla of old or not. So that's something we have to keep in mind. But nonetheless, yeah, I'm trying this new technique. We'll see what happens with it. And again, the supply and demand works great. I'm not saying anything bad about supply and demand, but this, I'm trying to more pinpoint a reversal. And so if I can pinpoint a reversal, that's kind of what I'm doing with this and why I'm really watching this. Now, typically, fair market value is 50% of if you have one of these more explosive moves up. And so that's what the 50% retracement is. Essentially, anything under here, the market could reverse at that point. But that's fair market value. Anything above this, you shouldn't be buying. And then when you start looking more into the 61 to 78% is more of that's your best opportunity to buy. And what I've been talking about, just been picking up this new technique, and it lines kind of perfectly up with a 75-point basis move, if you didn't notice that. So I'm trying to be more accurate on where this is going to potentially reverse. It's not saying it will. Again, all these techniques, they work to an extent. If you're not paying attention to price action can change very quickly. This is why I talk about the algorithms. If any news event comes out, the market can just start selling, and it's not going to matter about your charts. It's not going to matter about what whatever technical you're looking at. None of that matters. It's going to be broken and it's going to fail because the algorithms will take over. And it works the same way in the other way too. If you're trying to go short and some positive news comes out, provides hopium for the market's going to rip off it. So this is why you have to be very adjustable and be day to day on everything. So really, again, I'm trying to look in between this area for a potential reversal. Again, it kind of perfectly lines up with that 75-point basis move. Again, this isn't accurate. Obviously, that's a pretty big gap there. It's about a 100-point gap from this move. And so that's what we're kind of looking for. That's the optimal buy-in, right, at this point. So that's kind of what I'm looking for. Again, anything under the 50% is fair market value. So again, the market could reverse at any point. But optimally, this is where you would like to get in. It's not saying it will hit it, but if it does, that would be your best bet. So we'll see how this plays out. Again, I used it today when it first attempted here. It was actually held here on the lower time frames, and it's kind of why I got in, because it kind of was wedging here, and I actually captured this little pop towards the end of the day. And because I missed this move, because this move didn't provide me an entry at all. Obviously, when this trend line isn't here until after this is already broken down, you can't just assume, oh, I'm just going to randomly draw this trend line and it's going to break. And no, it didn't even hit. It attempted to try to go to yesterday's high, but it didn't even make it that high, and it just died. And then this, unless you were on some lower time frame, this didn't even retrace. It just sold off. So I didn't really get any entry this morning, and so I saw this pop, and I grabbed this, and I caught this all the way up. Sold that almost perfectly. I think it pushed up just a couple more bucks, and that was pretty much it. And then it died. I went back down, now holding. Again, fair market value right now, so essentially anything under this would be worth buying. But we'll see. It depends on the time frame, and I base this off of the daily. And again, also to go with this technique, you have to also understand that it has to be an explosive move. So there was an explosive move here on the daily. So I tried to retrace that. And I also did the same thing on the lower time frame on the hourly, watching this thing to try to hit up to that 50% to get inputs. Potentially right here would be optimal. Again, not saying it will. Anything after 50 is potential fair market value. So I was kind of watching that. the market didn't even come close. So I just let it sell off and then hit that. And then I did get the reverse towards the end of the day. But nonetheless, again, it's a new technique I'm trying. It worked today. It doesn't say it's going to work tomorrow. Again, not every technique is going to always work all the time. There's a lot of other things that come under consideration. And so don't just take anything as being essentially the one thing that's going to fix everything. It's knowing a little bit about everything, knowing the market sentiments, knowing price action, and kind of watching and seeing what happens from that point. And then when you get closer to certain levels, then you watch price action even closer, maybe jump down to lower time frames and kind of see the reversal first and then jump in at that point. But again, that's more intraday kind of stuff. When you're looking at like longer swings and stuff, supply and demand works great, especially if you can find the higher time frames. That always works really good. But right now, even on the higher time frames, we did retest. We got rejected. I'm expecting some sort of a pullback. I don't know if we're going to get quite down to 3,800 unless we really get some bad news, but kind of really watching that. Bitcoin still holding, watching this. Essentially that 18,700 mark. See if it breaks that. Break that, it could get some pretty heavy selling there. Again, the market in general, I'm really just waiting to see if we do reach panic. If we start reaching panic, then it could be some trouble. But right now, we haven't quite reached panic just yet. As you can see, I was using this technique on Tesla a little bit today. The dollar up here, just look over that. I don't like going over the chart. Just look at the number 108. It's still very high. It's good to kind of go over those numbers each and every day to kind of see where they're at. So dollars at 108. Oil is sitting at 92. So the oil is still, it's dropped down a little bit, but still very high. Tesla, obviously daily here had that run up. And so 50% would keep it at 264 roughly would be fair market value. Again, your kill zone here that you really would like to get it at is roughly more so around this 241 mark. Would be perfect to get back into Tesla. Again, that's not saying if the general market sentiment changes, this thing could flush straight through here. So again, new technique. I'm just kind of briefly sharing it here. Again, I don't want you to go run off and think this is the end all be all, but I'm experimenting with it and kind of seeing how it works. Obviously, I still have the zones up on here, but I had them off on SPX. So trying to watch this. And if it does work really accurately, then I might remove the zones and decide to use this more so because I like a cleaner chart. And sometimes after doing this for weeks and months on end, you have a really nasty chart, and then to delete everything, you got to redo all the lines for the daily and stuff as opposed to just adjusting them. So that's kind of what I'm messing with it too. But BA, obviously I haven't done every chart. BA, it's still consolidating a lot, so expecting some sort of a move. If it breaks up, it needs to break 134. Breaks down, it needs to break 156, and then we'll get a direction on BA on value. Again, I think more data needs to be taken before this really does do anything. The banks floating back around that 111. If it does break that, we're in trouble. Again, if banks really start giving and selling heavily, you're going to see the same thing. So, and then to the upside, it really doesn't look good. We try to break out and then flush straight down. I wouldn't be surprised if we actually reattempt back up here to 116 mark and try to flush. Again, it really needs to break that 111 mark for us to really start getting some heavy downside action there. But that is pretty much it for today. I don't want to get too much into anything else. Again, I think a general market understanding what's going on. You should be playing only a couple of very few, if anything, right now. Again, I've been playing a lot of just the general index. To be honest, Tesla, I've been playing shares, to be honest. And even now with the dilution of the shares, I'm kind of really debating and seeing how that's going to play out. I might shift into some other tech. Chips have actually come way down as well. Chips look like they could potentially sell here if chips can break essentially the 134 mark, open below 134. I think this thing can get some pretty heavy selling for MU. I think chips have already taken a pretty good beating already. So you potentially have one more leg down. So you don't really have a lot of more meat on the bone. Would have been better to have grabbed it about two days ago on Friday when we had the sell-off, as opposed to right now, because now you only got a little bit more left on the bone there. So just kind of waiting and seeing, and then going from that point. So just keep it light, keep it easy, and I'll see you guys in the next video.